Hello, everyone, and thank you for joining us today. I am Mark Schluter from Alinean, and I'm excited to introduce our speakers for today's session, an interview with IDC, Financial Justification, a Requirement for B2B Buyers. Our speakers today include Randy Perry, IDC Vice President, Business Value Consulting, and Tom Pisello, CEO and founder of Alinean, and well known as the ROI Guide. I posted the blog links for Alinean and IDC in the chat section of WebEx, along with the link to the book, Alinean Frugal Survival Guide. I encourage all of you to take a look. These are great resources filled with great content and best practices for value marketing and selling. We will be conducting Q&A at the end of the session, so please send me your questions at any time using the chat feature in WebEx and sending to all participants. Before we start, note our next event is Thursday, October the 13th, 11 a.m. Eastern Time. This Sales Stack Q&A event will feature Nancy Narden, founder and CEO of Smart Selling Tools, interviewing Mark Arman, Vice President, Business Development and Strategic Alliances at Starleaf. We hope you can join us October 13th. The link to register for this event is in the chat section of WebEx. Today we have some great information to cover, so let's get started. Tom?
Mark, thank you. And Randy, welcome. Thanks for joining us today.
My pleasure, Tom.
Excellent. Well, we've got some great research to present, Randy, on the importance of business value selling. You guys have been busy conducting a lot of research and developing a lot of client projects on value. And I know that from that research, there are some great insights for every sales and marketer to kind of pay attention to on their strategy. The first trend that I'd like to talk to you about that caught my eye in the research had to do with who now controls the technology purchase decision process within a typical organization. And wanted to get your take on it. So I know that the trend has been that business has been gaining a lot more control, but these latest numbers were a little bit startling in terms of how much control that is.
Yeah, Tom, over the last 2 years, business drives more and more of technology buying, primarily due to the fact that how important technology has become to the business. So as demand for more third platform, innovative technologies comes to bear, as IoT kicks in, as the need for digital transformation within organizations kicks in, more and more you're going to see purchasing coming from line of business and from the CEO really driving the direction more than the technology buyers.
Yeah, particularly I know that most digital disruption projects are C-suite oriented, particularly the CEO controlling the majority of those. And then on the business side, I know that cloud, software as a service, has made it a lot easier for businesses, and whether that be individual groups or entire business units or even individuals within the organization, to go and procure their own technology. And so definitely that trend has taken root, as we see here. 58% of the business now controls, quote unquote, the technology purchase decision. And I do want to point out that that doesn't mean IT isn't involved in that decision making, but it's kind of who is driving the need and who's driving the process that has changed. We don't see IT getting completely cut out of those 58% where the business is involved driving it. But it's almost like when that does occur, IT is playing more of a security role, a governance role, and they're less driving the business needs and the demands and the business case for the overall purchase, correct?
That's correct. The decision making in terms of who spends the money, and the decisions are becoming bigger, right? I mean, there's a lot bigger technology buys, and that's going to require a higher level of approvals across more stakeholders.
Now, the big impact for this, if you're in technology marketing, if you're in technology sales, and even if you're in business to business that has a technology focus, is that because of this major shift, now almost 60% of the technology purchase is controlled by the business. how adept are your salespeople at having business discussions and talking about business challenges, business differentiators, and business value as opposed to IT? And I think that's a key question we all need to grapple with. And we can't sit idle. They're not going to learn the language. They're not going to have the tools they need to engage unless we provide that to them. And it's becoming essential that that be done, because you'll get cut out of the 60% of the business-driven purchasing decisions if they don't have that acumen, they don't have the tools, and they can't have those business value discussions. The other really big trend that struck me in the research, Randy, is that more stakeholders are involved in the overall decision-making process. So I wanted you to talk a little bit about these two metrics here in terms of the increase in the amount of stakeholders and how many people are involved in every decision.
Yeah, Tom, again, as more organizations become focused on especially launching new applications that are many times designed to support individual business units within the organization, so that business unit leader has to be involved. Then you've got the overall IT folks that have got to manage everything, and then you've got all both the financial buyers and the business buyers in the organization also weighing in. That's what's really grown these. And again, and the decisions are getting much larger because companies are more and more looking at, what do I do with IT to help transform and enable my business to be more effective, more competitive, bigger decisions, more people involved. And that, if you think about that group of 8, that's not 7 technology buyers and 1 business buyer. It's quite the opposite. So you've got a couple technology business, but the majority of the people sitting there, they're really not too interested in whether or not you have a flexible infrastructure and whether or not you can efficient infrastructure. That's important to them, and that's going to be the IT guys' role to show that. They want to know about, okay, how's this going to impact my business?
Yep, totally agree with that. And from the picture, one of the reasons why I put that picture in there is we see that there are 3 stakeholders kind of first and foremost, and then a whole group of people behind that are involved in the decision-making process. And that's the view if you're a salesperson or even if you're marketing and you're trying to engage these organizations. The old term for it was champions. The newer term is mobilizers. And there are now way more people involved in each decision. Organizations have become risk averse, so that they're trying to, they figure if they spread the decision around to more people, it'll help to defray that risk. The issue for sales and the issue for marketing often is how do we get our message, our story across around the value of the solutions and the unique value we can provide to all of those different stakeholders, when normally it's the champion or the mobilizer who we're engaged with. And we don't get a chance to engage directly with a lot of the stakeholders. So we really have to make sure that we're arming the mobilizer and the champion with the right messaging, the right communication, the right quantification on our unique value, so that they can convince others that, yes, this is a priority project. The challenge that's being addressed is first and foremost, and it requires time and investment, that the solutions have been well vetted, and that the 1 or 2 finalists are unique in their ability to deliver it. And we're not able to get to those 8 to 10 decision makers and stakeholders. Often it's just 1, 2, 3 folks that you're going to work with as a sales rep or marketing that you're communicating with. So more stakeholders, definitely more of a diverse group, as Randy, you indicated, and then we're not able to get to most of them, so it's selling and marketing by proxy in a lot of these organizations. Now, Randy, you indicated kind of the business units and the taking more control of the technology purchase decision. There's more stakeholders involved. One of the other things that struck me in the research was the dramatic shift we've seen in the business value metrics that kind of matter most to organizations. Post the Great Recession, most organizations were focused on cutting costs as quickly as possible to maintain the bottom line and maintain their earnings per share. then kind of moved on to perhaps improving productivity, and IT in particular was focused a lot on cutting costs and driving manual processes out of the data center. But based on these latest numbers that I'm showing here, there's been quite a shift over these past 2 years, hasn't there, in what matters most in terms of business value?
Yeah, Tom, we do in-depth interviews with about 500 companies a year, asking them these sorts of questions. We also do in broad surveys interviews with thousands of companies every year, and typically we're going to ask them what's important to your business in terms of how it measures its success. Mm-hmm. And more growing revenue is by far, in a way, the most important factor that companies look at. And it's one of those things that if doing an analysis, to help a company doing an analysis that's primarily going to be focused on selling to technology buyers, they've got to deliver that message on how improving technology is going to enable certain activities within the business to support growing revenue, and that becomes very important. Same thing with improved productivity and processes. Again, the messages have to lead to really touching on these important points that are very important to the business folks across the board. And the same with risk. All of these things. What's also interesting, especially for sellers out there, is again, in the last 2 years, and we primarily talk to, these are interviews with senior level IT folks, C-level and business IT folks on the IT side. What's interesting is senior level IT folks these days can answer questions specifically about this. They know how much technology impacts their business. They can quantify those sorts of things. So your salespeople have got to deliver those same messages, that how their products can actually impact these things. Very important.
Yeah, I totally understand. So before it used to be about reducing technology costs, maybe improving IT productivity, and now it's to how can you help me to improve my user productivity and collaboration, streamline business processes, reduce risk, both security and just business risk and uncertainty in the business, and then disruption is key and top of mind to most organizations strategically. So how do we take advantage of technology to digitally transform the business and ultimately perhaps introduce something new to disrupt a market? It's definitely not about reducing costs or the infrastructure anymore. It's about business value, not necessarily IT value. So definitely spot on in the same things that we see. And with all of the interviews you do for all of the different companies that commission the research, you're seeing it firsthand and repeated over and over again because you guys go and ask, what is the business value you derived from these solutions, and getting that real world feedback. And it's been pretty dramatic in terms of looking at that research, Randy, in terms of how much now is focused on revenue. And as you said, from IT too, that IT is definitely getting that business lens a lot more. Now, what I find when I look at sales or I look at marketing is there's definitely been a shift in marketing messaging to relate to this. But when we go on drive-along sales calls, we're still seeing leading with the technology and what the technology can do from a kind of an infrastructure standpoint in a lot of companies. So, the total cost of ownership of the infrastructure and some of those things, because sales tends to be comfortable with it, tends to be a little bit front and center. And some of these other areas, particularly these softer benefits, like around business risks and revenue, those can be a little bit harder discussions to have, particularly if you want to make these tangible and quantify them. Any insight there, Randy, on ways companies are kind of making that transition and are able to quantify, for example, the reduction in business risk?
Yeah, in many cases, Tom, and you talked to a very good point there, is that salespeople are most comfortable talking about technology because that's what they've been doing. Their audience, for the most part, in their careers, have been technology buyers, so they know those kind of conversations. Most of them are really pretty adept these days at talking about lowering total cost of ownership, and also, returns on investment regarding technology for the benefit it's going to do in terms of reducing the cost of technology or improving IT operations. Where they're weak is in the other area of how it impacts the business. But to your earlier point about the only talking to the mobilizers and not the stakeholders in the back, they need to know. You need to know these types of information. So they've got to, even though they're there talking to the IT guy, they deliver these other messages that are gonna resonate.
Great point, because a lot of times you shape the presentation for your current audience, and you may be talking to a director of IT, and they care a lot about technology, but we have to arm them to have those business discussions because the rest of the organization may not care as much. And so it really is, even though these percentages are here, there are different stakeholders with different points of value that they care about, and you have to make sure that you're messaging to all of these in this value map. Randy?
And I think, from a pure discussion, if you think about some of the big things that companies are doing, and let's just say, moving to private cloud, or making huge investments in new technologies that they're really not familiar with and really don't know what the impact's going to be. The big issue then is, how do I justify this huge cost? If I'm going to spend a couple $1 million, how can I justify that cost? And you really can't in many cases based on lowering CO. It's just not going to. It's not valuable enough for the organizations, those stakeholders are making that decision. So you have to be able to show how it's going to impact, enable the operation to do new things that's going to have more value and include those values. That's the story for these really big deals.
Yeah, so it's not about comparing, as you mentioned, cloud. What's the cost per month of a cloud solution versus maybe a traditional on-premise infrastructure. It's not about how you can maybe streamline some of the IT process, but it could be more around time to market, the ability to launch new business applications, launch them better, quicker, improving customer experience, driving better security and reducing security or data risks, compliance and governance control. Those are the things that the business will care more about in that cloud solution, and they could, they're willing to maybe even pay more to gain some of those time to market or new business application or particularly customer experience benefits nowadays. And so cost is playing much, much less of a role. Now in terms of, go ahead, Brandy.
No, as we know, the CEO cares about agility, customer experience, and innovation. So those are three things you kind of need to talk about. And there is every analysis these days, you've got to be able to assess the security and the business risk part of it. That's a part of any kind of transformation that's got to be addressed. Whether you do it in a financial way or not, got to understand all the risks associated with it and the potential downside because of that. That's got to be part of the analysis.
Completely agree. Now, there's been, we've taken a look at this year over year in terms of financial justification, the demand for it, why it's so important. And we have some key metrics to communicate here if you can walk us through it. So financial justification looks like it's darn near required on almost every purchase decision in technology nowadays.
Yeah, I think anything that involves a certain spend level and requires a decision on the part of the central part of the organization is going to need this. I mean, there may be business units that have certain budgets that they can spend without this kind of analysis, but anything of any size or done for the whole organization is going to require this.
Definitely, and I think that the larger the purchase, the more financial scrutiny and the more formal the business justification, the financial justification has to be. I think the smaller it is, the more you can maybe get away with a little bit less, maybe estimates or back of the napkin. But is the clip level now around kind of 75,000 in terms of where it's really required with a lot more diligence? Is it higher than that? Is it lower than that?
I think somewhere in that 50 to 75K range is probably what we're talking about, again, depending on the size of the organization, for sure.
Yeah.
But, you know.
Excellent. And one of the other things out of the research that you've done on financial justification that's important is that when we look at buyers and their acumen in this area, you know, it's not like they can't crunch the numbers, but in terms of putting together specific business cases for specific projects, they definitely struggle. They indicate that it's not exactly easy to do.
Yeah, we ask companies quite often when we interview them, do they have any kind of methodology in place? Have they done their own types of analyses on this? And surprisingly, the answer still comes out no batter the size of the organization. Now, organizations are much better these days at using data. It's very important, obviously. I mean, big data is a huge market, and companies are much better at crunching data, but it's focused on, you know, generating growth. They're not using it so much to look at things like what's, you know, these types of analyses. So despite the fact they're much more data savvy and much more open to data discussions and data justifications, they're still really not very good at doing this themselves.
Mm-hmm. Yeah, and it's hard for them to, you know, understand all of the cost or the benefit metrics that they should be considering. So they want help, they want guidelines, they want research and advice on what numbers to plug in, and doing it cooperatively with them is really important. They'll often get a formal spreadsheet from the CFO to use to kind of do the ROI or the NPV, kind of the heavy lifting calculations, but they don't know how to populate those models. Making it really important for the vendor to get involved, or perhaps risk really delaying a lot of the purchase process, correct?
Yeah, I mean, there are a lot of vendors out there. Some of them are very, very savvy, have developed very, very good value organizations within their companies to generate this kind of thing. But more and more it's expected that the vendor will supply it as kind of table stakes for being considered.
Yeah, and that is really interesting. It definitely is table stakes. We have seen some pressure lately where companies, though, are maybe not investing as much in their value programs, which we'll talk about a little bit. But as you mentioned, it is table stakes. And if you think that the buyer is going to be able to produce the business cases on their own or the financial justification, be able to put together what needs to be communicated and quantified to the rest of the stakeholders, this 65% figure here, the 2/3 that don't have the knowledge or tools, you know, what are they going to do? They're either not going to communicate it effectively, which means the whole purchase could stall to do nothing and get lost to do nothing, or they don't do a good job of putting it together and communicating your unique value, and so they're going to be, basically you're going to lose the deal to the competition, or if you do win the deal, they're spending so much extra time putting the business case together that you've delayed that deal 1, 2, 3, 4 months while they're going and compiling those numbers and doing the research. Now the conundrum for vendors is that 2/3 don't have the knowledge, 81% expect vendors to provide the analysis, but less than 15% say they trust financial justification if it just comes from the vendor alone. And do you want to talk about that a little bit in terms of the importance of third-party validation?
Yeah, Tom, I mean, of course, this percentage is what drives both your business and my business. Mm-hmm. You know, many times companies come to us to do this kind of work because they want IDC's name as part of the research. Mm-hmm. that undergirds it. We're going to create a white paper for them that's published, that sort of thing. And you know, they're going to go to you because you know how to build tools, and mm-hmm. and also it's a you know a third party. It's not necessarily coming directly from them. So that's the real driver. Is that again, companies can't do it themselves. They expect the vendor supply it, but they really trust what the vendor is going to tell them because they know it's going to be, very self-serving, very marketing-oriented, which it's to be expected, which is supposed to be. Mm-hmm. But there is value to them in trusting somebody from a third party delivering the message.
Absolutely. So the research that you all do to make sure that the results, the savings percentages, the business value that's being touted, interviewing companies that have implemented those solutions and finding out what the most important value is and what the percentage savings or percentage revenue gains or percentage risk reductions are, absolutely essential to have real customers researched and case studies in there. Having a third-party model that was developed by someone who isn't going to be biased towards the solution and is expert at putting those together, I think is important. And then also, including beyond just the research and that third-party validated tool and metrics, also including success stories so that they can see how others have implemented the solution and making sure those success stories are actually tangible. So that they're not just communicating a story around the value, but they actually have some quantifiable metrics so that they can compare and contrast to what others have achieved and where they think the main value was derived is important. So there's using research and a research analyst to help make sure everything is fundamental and research-based. There's third-party model and tool development so that you can point to someone else who developed it. And then there's internal or success stories from your customers that also can play a big and significant role in communicating and kind of gaining that credibility. Now, even though most buyers require financial justifications, they want the help, they really want vendors to do it, I think that we find that, unfortunately, there's still a lot of ground to be gained by sales and marketing organizations. And Randy, do you want to talk a little bit so that you research around this in terms of how good a job folks are doing in their value program? And this isn't meant to be critical, these are just averages. Many on this call are already attuned to value, have implemented programs themselves, but on average, they're in individual engagements with sales reps or perception of websites and content that's being consumed, there's definitely a lot of room to be, or ground to be gained in the value programs.
Yeah, Tom, we, as part of our projects, if we're developing something that's ultimately going to be used by sales, we always want to talk to the sales folks as well as part of the process. And the problem remains is that there continues to be a disconnect between marketing and sales in terms of, sometimes the messages are presented in marketing, but aren't necessarily worked into tools and the other things that the salespeople are going to use to close the deal. And you got to think of this thing as a program, right? A program that is all one thing. And it's got to be, you got to develop a program designed to deliver a value message and touch on all phases of the buyer's journey from initial interest to closing a deal. And so everybody's going to have a sales force that's not yet learned how to do this. So that's something that's got to be overcome. You got to figure out a way through interaction with your sales force, figure out the best way to do that. In many cases, you're going to want to automate part of the process to help them. And you might even want to, as you said, don't do a good job articulating their unique business value. That's part of the automation process. And then, the problem is that companies quite often kind of give up on this process because it's been very difficult, or they've tried and haven't really been successful. But, we've talked about how it's become more and more important for their salespeople to do this. And so, now's the time to make these kind of investments to get your salespeople over the hump. There's lots of new ways of doing this. There's lots of supporting products that help enable sales that maybe weren't used before. So, and I'll bring out an example. Again, in the last year, we run into organizations who buy our white papers, our BV ROI white papers, who more and more tell us they're being used now in sales enablement. Salespeople take the white papers and actually use them to initiate discussions with their customers, which is one of the reasons why, working with you, we developed the whole dynamic white paper piece. But the point is that, sales hungry for this kind of information. They need this kind of information. It needs to be brought in so that they can deliver compelling stories that deal with value and are going to address, all the different stakeholders. And it's a big training deal. It's providing the right materials and the right training to salespeople. But again, I think the time now is right to do that.
Yeah, and I think there's a digital journey to kind of look at with the content where buyers are consuming some of the content on their own. And then there's kind of the sales and specialist-led journey as well. One of the things that we're seeing on the sales journey is that, there's a move afoot to digitize more of the process and to commoditize a lot of sales organizations as a result. And we've seen at least 3 or 4 organizations recently consolidate or even cut back on their value engineering programs. So the largest deals, the ones that really need the most financial justification, now don't have the resources and support to deliver those business cases. And I think it could be quite a big, fatal trend for some of these companies where in the largest deals, they're leaving financial justification to chance completely. And any organization that comes in and provides that business case for the buyer is going to have an advantage. And if there is no competition, but they're leaving it up to the buyer, there could be some significant delays and even stalled deals as a result. So, that trend has been really interesting. And don't know if you've seen it as well in a couple of organizations, Randy, or have any comment on that.
Yeah, I just think more and more it becomes critical to tie the business value message you're delivering in all your marketing materials specifically at the end of the day to products and services you're delivering to enable your salespeople at that last stage to be able to link the two together and also make it logical enough to the customer sees the compelling link between your product and the business value that you're marketing.
Yeah, so a lot of it is, rethinking some of these programs. The specialists may not be there. Those specialists who used to be focused on just business value, might have 2 jobs now. They might be a sales specialist plus a business value specialist. So if you're developing the content, you've got to make sure that buyers are armed with tools to help them to maybe build their own business case in a simple way or be able to articulate that business value to the other stakeholders. And if you're wanting to roll programs out to sales, you can't rely on those specialists. You have to simplify these programs to gain that adoption and make those connections. So as we look at, you mentioned the buyer's journey, Randy, and I think that's one of the best ways to kind of look at this. There are different types of business value to be applied depending on the stage of the buyer's journey that you're in. In the beginning, it's about helping the client generate ideas, helping them to understand their challenges and understand, well, why should you change right now? If it's not broke, don't fix it, is sometimes their attitude. They don't have a lot of time or money to invest, so they need a lot of convincing to break through business as usual and the status quo and ultimately change. In the middle of the process, it's about exploration and evaluating potential solutions. And the typical question that gets asked is, why now? Okay, changes should be done, but we got a lot of other priorities. Why should this be a top priority? And are there really good solutions out there to help us to solve it? And then ultimately, in the latter phase of the initial purchase, why pick you as the vendor? How are you uniquely positioned and situated to deliver greater business value to be lower risk for that organization? And then one that's becoming, we mentioned cloud, software as a service. Many business services even are recurring nowadays. So why renew becomes a new mantra where it's not just about using business value pre-sale, it's using it post-sale to prove the overall realized value delivery. So Randy, you want to talk a little bit about some of the IDC tools that you offer in this space, and then I'll add some of the tools that we offer as well.
Okay. Early on in most of the buyer's journey, you got folks out there just looking for information and a value story, right? And so when we create white papers, we always ask our customers, who's your target audience and what kind of messages are you trying to deliver? And typically we're talking just high-level, C-level organizations. So they're out there looking, going through the web, looking for information, going to link a new technology with value. So that, what the heck is software-defined networking, and, what's the value to that? Things like that. So that's why white paper is very effective in that stage at delivering that message. And then as they get kind of deeper into the process, then they kind of want to see, and again, you could design a whole campaign with WebExes and infographics and everything that kind of reaches out and delivers a message in different ways, different forms, but the same message. And then as they get into more evaluation, they want to understand something that's going to specifically apply to them. And that requires interactivity. That requires some kind of tool that enables them to look at the world from their information, their organization, and see the value that's going to come out with implementing a solution. So that's when things like, maybe lead gen tools, but certainly the work with dynamic white papers and things like that. So that kind of gets to the next level. Not detailed enough yet necessarily to close a deal, for sure, but definitely in the space where they understand that, okay, based on a body of research, this is the potential return on investment, potential savings we could see, potential value. And then at that point, beyond that point, you really get into more sales enablement types of tools where you have a one-to-one interaction between the sales folks and the potential customer, and here you're developing more of a detailed business case that specifically ties to products and services. So.
Yeah, and it's definitely a progression. I think that when you look at it, there are both self-service tools across the spectrum because some buyers will just not reach out to sales or maybe want to do it on their own, as well as arming sales and consulting to have those discussions. So you mentioned the research papers up front to give the customer ideas about change. And the more you can make those interactive and dynamic so that by putting in a little information, they're not getting a generic research white paper, but one that's specific to them, focused on their challenges, their numbers, their metrics, all the better at being able to personalize a communication to their customer to spark some ideas and get them going. Assessment tools play a role in that you can evaluate where a customer is and get them to measure themselves against a good framework of progression of capability maturity. And from there, you can score them and score them against their peers and help identify areas that they should be paying attention to that they might not be within their organization. So challenges that may be hidden that you're helping to reveal are amazing results of using assessment tools. And then the areas they know they need to maybe clean up a little bit in their organization, you're helping them to prioritize it, because with that peer comparison of the score, you're giving them evidence to take their executives and say, look, I took this research-based assessment and it says we really need to improve in these 3 areas. This confirms exactly what I was telling you, executive, in terms of what we need to focus on. As well as, hey, I used this and I uncovered 3 or 4 things that we should be paying attention to that we're not, and the research says if we don't address it, it's going to have a significant business loss or opportunity loss. And then as you go through the journey, being able to interactively work with the customer and tell a better value story, so communicate what the value is uniquely you can deliver to address their specific challenges, so focusing on the 2 or 3 challenges they have, quantifying that, and then ultimately being able to produce the financials. And Randy, I've got this foundational layer here, and I do think that's important in terms of making sure that anything that you're doing across the entire business value roadmap, across this journey, that all of the tools are based on, research-driven surveys that you guys do, and then we do these value messaging workshops to make sure that we've got the differentiating messaging, that it's based on customer research, that it also is able to tell an effective story and quantify that story. And so before you go and build these individual tools to kind of address the business value roadmap, whether it be a digital journey in marketing or a sales consulting-led journey down below, if you don't have that research, you may not know effectively what the challenges are that buyers really want to have addressed, what the unique business value is that you can deliver, and then you may not have all of the storytelling you need to have conversations with each one of those different 8 to 10 stakeholder personas that are out there. So I do think that there's a little bit of foundational work to do first, and then this hopefully provides at least one version of a roadmap that you may use as a guide to kind of go through and assess your own tools against this and hopefully give you some ideas on some new assets. At the end, we've got Why Renew, and there are realized value tools that we've been working on a little bit more with customers to prove the value of renewal and also to be used to up and cross-sell within the organization. One that we're working on and delivering with a customer in big data is being used to kind of measure where the organization has already implemented the solution and the value that's been derived, and then also help the organization assess where else it could be used in different organizations, different business units, and how much value could be derived from that based on the value that has already been realized in the organization. So it does both a measurement of current value as well as derived, as well as projecting that value to other parts of the organization. Randy, in terms of some examples, do you want to talk a little bit about dynamic white papers and kind of give a little bit more information about what they do?
Sure, Tom. And this is something that we work together on, IDC and Alinean. We basically put together a white paper based on our research, and then present that as a document that's going to reside on your website. And then we work with Alinean to take that white paper and turn it into a gen tool. And we do that by identifying certain key questions that enable the underlying data engine within the model that the white paper is built on to make something that's looking at an aggregate model of a bunch of things, make it look like and actually work specifically to a given company. So what it then does is kind of restructures the white paper to not be a general story, but a story specific to an organization. And there's a few benefits associated with it. One, and the reason why we created it in the first place is, again, this is somebody out there looking for a message that then can take away a report supported by IDC research that can tell their CFO, look, this is the kind of return on investment we could see, or this is the kind of benefits we could see. So that's key. And the other thing is that it personalizes them, right? It's custom directly to them. And the promise of this compelling content gives us much better hit rates. If you think the standard lead gen tool is going to generate somewhere in the 5 to 7% hit rate for actually getting leads, we've seen double, triple that easily. So the dynamic white papers we've done, just simply because, again, you're providing compelling content, so it gives companies a reason to register.
Yep, and by asking maybe one or two extra questions beyond a typical lead capture form, you're able to essentially pivot the content or calculate for them very specific business value outcomes, which is so much better than just a generic piece of research. It is all research-based, so it's delivering all of the value of a typical research paper, but it's really delivering a lot more personalization. And I think that's so important because there's kind of white papers, especially research white papers, have in essence become the crack cocaine of marketing. There are a lot of them out there. They're very much seen as valuable. But I think the more you can differentiate what you're delivering by making them dynamic, all the better. So collecting a little bit of information, and then from that information, there's an engine in the background that takes that, crunches the numbers, personalizes the content, and then provides that back into a dynamically built white paper that then gets emailed or downloaded to the customer. And it contains all of their numbers, their unique metrics, and is totally personalized to their specific challenges, the business value they can uniquely derive, the messaging that they care most about. So it's very prioritized, very customized, and is much more effective, as Randy indicates. 200 to 300x increase in response rate, and definitely an uplift in conversion and engagement is what you can see from those type of assets. And then here's another example, and you'll get this deck so you can click on the links and play with these tools yourself, is one of value storytelling and kind of business value estimation. So used early in the sales cycle for marketing, self-service, or for sales, the ability to enter in a little bit of data, be able to get a customized business value assessment, and then being able to click on different areas and focus on the challenges they care about and getting educated about those challenges, and then with the press of a button get a personalized business value estimate out of the tool. Another key asset that we talked about, and one that I think you can apply to your business value programs to improve the effectiveness, particularly in early engagements with customers. So Randy, I want to make sure we leave enough time because I know there's been some questions that have come in, and I'll turn it over to Mark to communicate those questions to us.
Okay, thank you, Tom. A reminder to everyone, please send me your questions to all panelists using the chat feature in WebEx. If we do not get to your question today, we will follow up with you in email. And as Tom mentioned, we will also send you a link to the recorded WebEx and the slides. So our first question, how early is too early for business value with a buyer? When best to first apply?
Well, as kind of we discussed today, you know, right at the first stage of the cycle is getting information in terms of, you know, white paper and that type of thing that orient a product solution initiative to value or earliest part of the buying cycle. So there is no too early.
Yeah, I concur with that, Randy. I think that early it's about giving them ideas around the challenges more so than maybe the benefits that you can deliver. So educating them about the cost of do nothing, the opportunities, helping them identify opportunities they might not be giving enough priority, on helping them uncover hidden needs, getting them and just giving them the tools to educate the stakeholders on the challenges and the problem and the pain is really, really important early on. And that's where research in terms of, you know, what pains others are experiencing, how big the hill was to overcome for them is so important, and having tools to kind of assess where they're at or give them ideas of where they should be paying attention to in the organization are so important in those early phases. So business value definitely early. The earlier you are, I would say weigh pain more than gain, and then as you move later in the cycle, it should be more about gain and perhaps less about pain.
Okay, great. So here's a couple that are related. First one, often we get the comment, why should I believe this business case? You're a vendor and you're just trying to sell me something. How do we get past this pushback?
Well, I think, again, third-party, you know, justification, validation, information, research helps a lot. I think also, you know, the use of as part of the conversation, case studies or examples of other customers that have done, you know, implemented your solution and have seen these kind of benefits from that also helps because that gives a touch point that is especially useful. Most companies don't like to be the first something, so it's nice to know they're doing something that some other organization's already done, and they can expect similar types of results.
Absolutely. And then the last one I'll add to that is, as you work through, whether it's a digital journey or a sales journey, if you can get the buyer to interact and get them to kind of own the business value, that's most important. So finding ways to collect information from them so that they know their metrics are driving the business case, and getting them to review any of the savings assumptions and spin them down or spin them up based on their personal feelings about how much savings can be generated or benefits can be delivered, I think is essential. So, ditto what Randy said on the third-party research models, metrics, and tools. Definitely having customer success stories, and then finally, finding a way to transfer ownership of the numbers over to the customer.
And this is a question that's somewhat related to that. The question is, I understand the third-party tool, but I've seen them to be too simplistic, so the buyer's real starting point can't be described accurately enough, or the impact is too simplistic as well. Randy or Tom, can you comment on that, your perspective?
If they're talking about sales enablement tools, we find that quite often different sales groups need different tools to reach different audiences. So on one hand, there are sales groups out there that are maybe initial stages, maybe focused on smaller companies. They're quite comfortable and find quite useful a more simple tool that still does the things you want the tool to do, which is kind of customize the outcome to specifically address the customer's particular environment, and also link to the solutions you're trying to sell, but done it at a little bit of a higher level, more simple level. However, there also is always a need for that more detailed tool that incorporates, as Tom said, both a lot of research and structure and kind of deep dive questioning, in addition to interaction with the customer, so that they feel part of the process and decision. So there's kind of a need for both. So you can criticize one, but there's always going to be sales people out there that need the. So many times, one sales enablement tool doesn't solve all your sales group's problems. Sometimes you need both.
Mm-hmm. And I do think there are clients and situations where you do need a way to interact with the buyer and customize the case quite a bit. But I do think that you also have to come in with a little bit of a point of view on the value to help to spur some of the thinking on for the customer. So it's a balance between, I'm definitely not a fan of a put three numbers in, kind of get a magical business case out of it, particularly a lot of, ones you see on vendor sites that aren't research driven. So I think there's a way to simplify things too much, but I also think that if we're wanting sales to do more, channel partners to do more, and buyers to do this on their own, which tends to be more of the trend now, it's easy to get too complex. And I think we have to think about ways to kind of simplify it and make it easy, but still have it be credible. Randy?
I agree with that Tom's last point is that, our clients tend to over engineer many times the sales tools, and they get too complex. One of the things where, and Tom mentioned it earlier, talking about maturity types of level analysis is a great starting point because it allows the audience to say, okay, where am I in this very important journey I'm taking? Whether it's moving to cloud or whatever the subject is. Where do I fit? Where are my peers? And again, the analysis is based on research, so it's detailed in that fashion. But the results are kind of simple. Okay, I'm at level 2. My peers, however, are at level 3, or I'm at level 2 and I really want to be at level 4. And it drives the next set of questions, which are, okay, one, what, is there a cost or a benefit? Is there a benefit to moving up, a financial benefit, or is there a cost to staying where I am? What's the cost of doing nothing? And then secondly, okay, what do I do to get to that next level? What things specifically do I need to do to get to the next level? So it frames a conversation. It's fairly simple analysis to show that, but it frames the conversation. It allows you as the technology provider to say, okay, this is what you need to do. It puts you in that conversation, and then obviously you want to tie in what your products and services do to help do that. But again, kind of covers both bases without going too deep or being too simple, but very, very custom and specific to the customer.
Excellent.
Here's a question around value realization. How frequently should we revisit the initial business justification and measure value realization with clients? We're thinking this would be vital to our SaaS renewals, but need some guidance on how and how often.
Yeah, I'll answer that first, Randy. We recommend quarterly and think that a quarterly cadence with customers, if you can afford it, is the best. Things change enough in 3-month cycles with most of the organizations, and we ourselves have implemented that kind of a review program with all of our customers. Having a customer success person go in and review the initial goals that we had, how well the tools are being adopted and performing against that, and then providing an assessment of the business value that was delivered that quarter, and then the past half a year, the past 3 quarters a year, the past year, kind of adding it up for them, I think is vital. So that's what I'd recommend. The cadence that most organizations kind of fall back into is kind of a 6-month cadence, because oftentimes there's not the infrastructure to support the quarterly. But the best practice is definitely to do it quarterly, and I'd say the most common right now is every 6 months to go back and try to measure that value.
Great, Tom. I can't add anything to that.
Hey, next question. Even though we know it's vital, our sales reps still resist using our financial justification calculators. How do you drive adoption and sustain use?
I think there's a couple things. One is to make sure that when you're developing these calculators, that you bring in your salespeople and you query them. You get them to talk about who they're selling to, and in what kind of position they're in when they're selling to. Are they trying to add on business to existing customers? Are they coming in trying to supplant another competitor and replace them? Different types of selling situations, different types of salespeople. Who are the personas, the stakeholders they're selling to? What type of messages do they need to do that? And so, you're actually developing, at that point, you're bringing them in, you're having these conversations. They'll understand that you're developing a tool for them to help them close business. And so you're both enabling them with information, but you're also they're now invested in the process. And that's really key in the first stage and every stage of as you're developing the tool to make sure it meets their requirements, their review. You might have to introduce some other things to them. Maybe one of the guys says, hey, look, I need to have something to deliver to the CFO that shows the ROI for this, but and nobody else may say that. But you have that one guy that said that, so you develop that. So that's the upfront element, and then the back end of it is training, 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 and training.
Well said, Randy.
Okay, we are at the top of the hour. Thank you, Randy and Tom, for participating in today's event. And, of course, a special thank you to all attendees for joining us today in this live session. We hope to see you at our next event, the Sales Stack Q&A event featuring Nancy Narden, founder and CEO of Smart Selling Tools, October the 13th. Good value marketing and selling, everyone.